Welcome back to Investing Talk Podcast.
Today we're looking at MP Materials.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. We are looking at a company that is fundamentally redefining the U.S. rare earth supply chain. The core narrative here is a strategic transition. They're moving from merely selling rare earth concentrate to becoming a fully vertically integrated mine-to-magnet platform.
Okay, let's unpack this. What exactly is this vertical integration and why does it matter so much right now?
It matters because of the geopolitical context. MP Materials hold one of the world's highest quality rare earth deposits at Mountain Pass.
Right.
Their strategy is to go all the way from mining the ore to producing the finished permanent magnets. This move is designed to make them the only fully integrated permanent magnet supplier globally at industrial scale.
And outside of China, I assume.
And crucially, yes, the only non-Chinese supplier of heavy rare earth refining when their circuit launches in 2026.
That sounds like a powerful competitive advantage, and we've seen major blue-chip clients and even the U.S. government betting heavily on this model, right?
Absolutely. I mean, the support is unprecedented. In September 2025, the Department of Defense announced a massive $400 million equity investment.
Wow.
Yeah, and this made the U.S. government the company's largest shareholder.
So they're literally invested in their success.
Exactly. And the deal, it includes price floors for key products and guaranteed magnet offtake, effectively acting as an anchor customer.
Okay, so that removes a ton of risk. And commercially, they have strong validation, too. What stands out on the customer side?
Two huge names. First, Apple, which committed $500 million for magnet procurement and recycling.
$500 million.
And that includes a $200 million prepayment, which is huge for cash flow.
Yeah, that's serious capital up front.
And then there's General Motors, which has a deal for 1,000 tons of annual magnet supply. So these partnerships, they validate the technology and provide durable revenue visibility.
Got it. Okay, so when we look at the financials, I'd imagine we're seeing a company in a major investment phase, which, probably impacts the near-term numbers, but sets the stage for something bigger.
That's it, exactly. It sets up what looks like a dramatic inflection.
And here's where it gets really interesting, right? Because in Q3 2025, revenue actually declined by 50% year over year to $31.6 million. That sounds worrying.
It does on the surface, but there's a crucial reason for it.
Okay.
That short-term revenue drop was intentional. They stopped traditional concentrate sales to China to shift those materials to their own internal value-add processing facilities.
In the U.S.?
In the U.S., yes. Preparing for the scaled downstream operations. The focus isn't revenue today, but revenue tomorrow.
What does tomorrow look like?
Well, analysts forecast a very steep upward trajectory. Revenue is projected to jump from roughly $279 million in 2025.
Right, the lower base year.
To about $685 million in 2026. That's a 145% year-over-year acceleration.
145%. That's a massive jump.
It is. And it's all because that's when the new magnet capacity is expected to monetize.
So what does this all mean for profitability? They've been spending a lot.
It means a strong swing toward positive earnings. Consensus EPS is forecast to turn sharply positive in 2026 at about $0.80.
From a negative number in 2025, right?
Exactly. Improving significantly from a negative EPS expected in 2025. This sharp shift implies significant operating leverage once those new facilities scale up.
And is the balance sheet strong enough to handle this massive capital expenditure? I mean, building these plants isn't cheap.
Yes. As of Q3 2025, they reported around $468.8 million in cash.
Okay.
And the cash burn from building out the new Fort Worth magnet facility in the California separation plant is heavily covered by that substantial DoD investment and the Apple prepayment.
So they have the financial flexibility.
They do.
Okay, so this stock has a dense calendar of near-term catalysts that could drive, a lot of volatility and upside over the next 3 months or so.
A very dense calendar, yes.
What's the most important event coming up that people should be watching?
The critical short-term event is the Q4 2025 earnings release, expected in late January or early February 2026.
And what are investors looking for in that report?
They'll be focused on execution updates, specifically progress on the Fort Worth magnet facility commissioning, which is expected by year-end 2025.
And that facility is the trigger.
That's the trigger. It's the trigger for direct, high-margin sales to GM, Apple, and the defense sector.
Beyond earnings, what else should investors watch for in the next quarter?
Two things: institutional flows and global expansion.
Okay.
We have major ETF rebalancing events expected in December and January, alongside institutional 13F filings, which could drive changes in ownership and short-term liquidity.
And the global side.
You should watch for the scheduled groundbreaking of their Saudi joint venture refinery in December 2025. That unlocks a whole new path for global reach.
We also heard some market chatter. I mean, there always is. Are there any speculative catalysts floating around?
There is persistent, unconfirmed speculation, yes. Market rumors include possible additional supply agreements with a major U.S. electric vehicle producer.
Tesla's name gets thrown around a lot, though obviously nothing's confirmed.
Tesla has been mentioned, though totally unverified, like you said. Any announcement of a new blue-chip customer or, say, accelerated DoD magnet purchases could drive rapid price movement.
Okay. So while the outlook is strongly bullish, driven by this pretty unique moat, there are inherent risks.
Of course. It's a complex project.
So what are the main points of caution for a potential investor here?
I'd say the largest risk is just execution. Scaling up those new separation and magnet facilities, which are super capital intensive, is complex.
Right.
Delays or cost overruns could push back that 2026 earnings inflection.
And we also need to remember the geopolitical link, right? That's a double-edged sword.
Precisely. The bull case is tied to U.S. industrial policy and, well, U.S.-China tensions. If those tensions significantly ease or U.S. policy support for domestic critical minerals wanes,
The strategic premium could shrink.
it could compress, yeah.
Yeah.
However, the existing DoD contract, that anchors its strategic relevance long-term.
So overall, the story is one of high growth potential tied to a strategic, really unique asset in a critical global supply chain.
I think the ultimate takeaway for MP Materials is that the short-term pain of transitioning away from simple concentrate sales is, really, it's the price of establishing a decades-long strategic monopoly over the Western permanent magnet supply chain.
And that explosive revenue inflection is just around the corner.
It's just 12 months away.
That's a strong proposition. Be sure to subscribe to Investing Talk podcast so you don't miss our next analysis.